Okay, so now we're going to start adding to our sheet areas that we're going to take a look at. So XLE was energy, but that was mainly fossil fuels. Solar is TAN, and another mature industry. Again, solar and wind are the two largest job growth industries. So that ticker symbol is FAN. All right, so if you can see, Google got us the price at 24.08, so we're going to put 24.08 in here, okay? And now it looks like everything is going to check out, so that's looking pretty good right now. Now, that's basically how energy is produced. There's other exciting areas, tidal, geothermal, fuel cell, but many of these areas aren't mature enough to have their own ETF, so they're either just divisions of other larger companies or in baskets of portfolios that are that don't really fall under a good definable umbrella. But now those are producing energy, and now after the energy is produced, it's going to be sold to your home. And so we have an ETF or a group called utilities. Okay, now utilities are under XLU. Okay, and this is kind of a sleepy industry. These stocks don't move around a whole lot, but as long as you're turning your lights on, people are paying their bills, and these companies are very profitable. They are going to require in the future a lot of capital to upgrade a lot of their resources. Our national grid and a lot of our internet security for a lot of these firms are outdated and need an influx of cash. So there could be some headwinds going forward, but a very stable cash producer. So an area we're going to want to keep an eye on. All right, now one big area of the market is the banks. All right, so are the financials. So XLF. Just put that in financial. So these are mainly banks. You've got your JP Morgans, your Citibanks, things like that, Capital One, Bank of America. So it looks like right now the ETF is trading at 29.54. So I'm going to put that in as my cost. But those are a lot of your Wells Fargos, your sleepy banks. They're with interest rates as low as they are, they're really not going to be generating a whole lot of cash right now. So we want to look at other industries that maybe have a little bit more upside. So within the financial arena is things like fintech. Okay, so financial innovations. All right, now there is a company that has a lot of different funds that are on cutting edge, and a lot of their funds are on fire right now. This is ARK Innovation, and this is ARK FinTech Innovation. All right, so they have a lot of investments in autonomous vehicles, genomics, a lot of quantum stuff. So I like to keep an eye on whatever they're investing in, and this is more like peer-to-peer transactions, so your Venmos, your Squares, your Zells, things like that. So not your traditional sleepy bank. Currently that's trading at 52.76, so we'll mark that as our cost. So you can see that all we have is our commission here. Now, not as innovative, but still in the cashless transaction realm is, I'll still call this financial payments. So financial payments, iPay, okay, you've got companies like Visa, MasterCard are in there. Square is also in there, so a lot of these are double counted. But as we're moving more to a cashless society, the way we pay for things are going to change. So iPay is with peerless transactions. ARK Financial, I think you might have some exposure to some cryptos in there as well. Now, sticking with technology, all right, there is the technology sector, XLK. Now, the NASDAQ has a lot of growth stocks, has a lot of technology stocks in there, but isn't just technology stocks. So XLK is a broad category, which is like your computers, your semiconductors, your financial payments, all kinds of technology is buried in there. Robotics, automation, all kinds of stuff is in that umbrella. So we're going to look at 132.04 as our cost. Okay, this doesn't really return much of a dividend, but some of the stocks that they own do pay a dividend. Now, within the realm of technology, I want to focus on some areas that have a lot of growth. So one is cloud computing. So CLOU. Okay, you can see currently it's at 27.89. 27.89. So the movement here is not hosting your own servers, moving your data onto somebody else's platform. So there's still a lot of growth there, so we want to keep an eye on it. But the new innovation, or the thing that could be disruptive in computing, is quantum. All right, so quantum computing would be the next step, and it could almost put a lot of companies out of business today if their new quantum computers will just blow away, theoretically, what current computers are doing. So 45.34 is going to be the price there. We'll put that as our cost. Also, there's not one for autonomous driving yet, but there are some AI funds. But the one that kind of I think is fun, although it is expensive, it's capital intensive, but BOTZ is robotics. So 34.78. A lot of the best robotic firms are actually private, but the ones that are publicly traded have some exciting things that are out there. Now, for ARK has innovation and ARK autonomous, so I'm going to do autonomous. That's autonomous driving. Okay, so like autonomous trucking, that's only a few years away, I believe. So that's ARK-Q. So you can see ARK-F and ARK-Q. Those are in the same fund families, just like XLE, XLU, XLF, XLK. Those are all the same firm that's putting out these ETFs. So ARK-Q currently is at 89.52. I think it's a little bit overdone, but there's a lot of excitement or a lot of potential for the upside. I forgot to do iPay, which is 63.80. Now, some other areas. Those are all different sectors. Now, I do want to open things up to other parts of the economy. So things that we should be monitoring, like materials. So materials, XLB. Okay, these are home builders. So a lot of times we look to them to see if people are willing to start taking out loans and building new homes, then the economy's probably pretty confident that things are going to be good. If you can see that housing starts slow and we're not doing new construction, lumber prices start to come down as people aren't purchasing it, that's a leading indicator that things might be shaky in the future. So that's XLB. That will be, I'm looking at things like lumber prices, housing starts, things like that, drywall pricing, anything within residential construction. Now, XLI is industrial. Oh, excuse me. So XLI would be, I want to look at what firms are buying aluminum or steel in order to build high rises and things like that, or manufacture automobiles. So XLI will give us an indicator on, what's being purchased there, what heavy machinery is being used. Now, from the consumer standpoint, we always want to be watching what the consumer is doing because about 2/3 of our economy is driven by the consumer. So there's two kind of categories under consumers that we're going to take a look at. Staples, which are things that we don't really go without. So here's your toothpaste, your shaving cream, your toiletries, like anything like that. This is part of your budget that we just don't cut, consumer staples. So if we see this getting hit, then that means something's really wrong with the economy if people are not buying paper towels, napkins, shaving cream, mouthwash, stuff like that. Now, discretionary, consumer discretionary is XLY, and this is kind of luxury items. All right, so if we're going above and beyond in our budget, we're not just looking for the things we need, we were looking for nice things. So in consumer discretionary, you might see companies like Tiffany's, okay? Jewelry is a luxury, it's not a need, okay? But in staples, you're gonna see Procter & Gamble, Johnson & Johnson, things that we just kind of won't give up. All right, now I'm gonna move a little bit into the commodity space. All right, so like we're gonna look at things like gold and silver. Okay, now gold and silver are not things that are going to make us rich, not unless we're mining for it and we stumble across it. Gold and silver are a store of value. They really a measure of how strong or weak your currency is. All right, so GLD is currently at 172.68. It was a lot lower, so it's gone up as the value or the buying power of the dollar went down, so the price of gold goes up because it requires more dollars to buy the same amount of gold if your dollars aren't worth as much. SLV is silver. Now, silver moves in the same way, although it's a fraction of the cost, but it has more volatility since it has more industrial uses that gold just doesn't. Now, rather than looking at all our other commodities like wheat, coffee, orange juice, corn, things like that, other regular commodities are traded in a basket called the DBA. Okay, now I would look for this if I think the price of food might accelerate in growth. Okay, and I might want to ride that potential, or if I see there was a drought in the Midwest and now wheat prices would go up, or coffee prices, depending on if the drought is in a different part of the world. So I would play that to the upside by going along DBA. Now, that's the price of the actual commodities, but then, and in commodities are also like beef, pork, agribusiness, is the companies who actually raise the cattle, raise the corn, and all that type of fun stuff there. So the ticker symbol for that is MOO, 8035. So there's the price of the commodities and then how well the businesses that are selling those commodities are doing. Now, two things that I think are going to get commoditized in the future, and I think are going to be very valuable, are water. Okay, we can invest in domestic water. I'm going to do H2O. And domestic water is the ticker symbol PHO. I still run under the thesis that as we have a diminishing supply of potable water globally, and we're moving away from oil. It was years ago, it was predicted that the next world war was going to be fought over oil. I think it's going to be fought over water rights. I hate to be a Debbie Downer there, but as we pollute more and more and we don't have clean potable water, we need to make investments in technology like desalination. Okay, that's taking salt water out of ocean water. That's currently very expensive, but as we can see that our clean potable water is such a finite resource, and companies like Coca-Cola, Pepsi, and Nestle seem to are buying up water rights all over the world. It's going to be problematic. So I think there's going to be a return on investment. Whoever really comes up with a cheap desal, either a solar desal or a reverse osmosis filtration system, will make huge amounts of money in the future. All right, so currently right around the election, have U.S. cannabis, so MSOS, multi-state operators. Right now it's had kind of a run. I think it should pull off for a while as all the enthusiasm of the election in November fades. I think this price is going to fade as well, but we still should keep an eye on it. Now, that's internally. Those are a lot of big components of our markets. And now I want to start looking a little bit overseas. So overseas, the more dominant economies. So let's talk about a US dollar way to invest in China is FXI. FXI currently at 50.53. It actually pays a dividend, although not huge. But they're kind of the engine of the world's economy. So it's one that we have to keep on our radar. Now, another, just based off population and potential for growth in the future, well, India. Okay, so INDA can get you exposure to that market. There's also other markets if you're more focused on income over growth, which is IFN, but we'll talk about that another day. That's a closed-end fund. Now, those are the two big players that I like to watch. I think the growth potential in those markets are enormous, even though they come with some problems as well, but all markets contain risk. Now, rather than taking a look at all individual markets here, one of the things I like to look at is emerging markets. All right, emerging markets are EEM. Okay, you can see the current price is 54.67. Now, at least for tonight, this is all that I'd like you to have updated as we go through the course and we notice trends in different areas, or we see headlines on Yahoo Finance. We're going to add to the front page, but this is basically watching the markets and seeing how things are playing out, and seeing if there's more excitement in one area or another. Okay, and the next page, we're actually going to look at individual companies, even though we're not ready to invest in those individual companies just quite yet.